Fine, it's Friday drinks, and we have got a lovely set here. I'm sure some of the pictures you could see, we have got actually guests on the bar. They're just going about their way in this bar. So the reason why we are shooting this show from here is because of a conference. There's an IPAS conference which is happening here, and that's why we have got Bevan Ngara, who is the president of the Investment Professionals Association of Zimbabwe. And Bevan, just take us through why are we here, and why is this conference important to you guys?
Thank you, Ranga. So IPAS is Investments Professionals Association of Zimbabwe. It's an association of CFA charter holders that are based in Zimbabwe. And we are here to discuss matters that affect us in the investments industry, all encompassing. And the theme for this conference is rising through the chaos and beyond as CFA charter holders. And we're looking at various topics that covers alternative markets. We're looking at even other soft issues like how do we deal with mental health in the workplace, issues of psychological safety. We are also looking even issues around gender, closing the gender gap in the industry, in the financial industry, particularly capital markets, where we are seeing that women are still lagging. So basically that is it. It's our annual conference. We go through different themes, and this year I think the most exciting one, which sort of excited everyone, was when we started discussing about the current choices and current paths that lie ahead, and it was quite an exciting conversation today.
And Bevan, maybe to the uninitiated, so when they hear CFA members or CFA charter holders, what should come into the mind of an ordinary citizen? What makes you guys special? In fact, are you special at all as CFA members, charter holders? So when you're talking to a granny or a young 6-year-old, what do you guys do?
Yeah, so you must think you're lucky if you come across a CFA charter holder, a chartered financial analyst. These are members who have gone through a grueling training process, which covers 3 sittings, and it's widely accepted the world over as the gold standard of an investment professional qualification. So we specialize in all matters capital markets, particularly focusing on investments analysis and portfolio management. So you look at us as people who give you investment advice. We are the people who are best qualified to manage your investment portfolios, to give you advice, to interpret economic policies with the bias towards our clients. So I think in a nutshell, we are that side of financial services where we are actually focusing on investing, as opposed to not only just taking deposits and giving loans, for example.
And maybe one would ask that if you've got all these sharp and brilliant minds in our midst, how come we seem to have problems with our pensions? I mean, if you look around, people are losing their pensions and all, and yet here you are, smart minds. What role do you play in that whole pension value chain as the esteemed CFA members?
So that's a good one. So when you look at CFA charter holders, we are doing the best in any situation, because when you're coming up with an investment strategy, it's in a context. So when you look at pension funds industry, I think the biggest aspect you want to look at is the loss of value, which comes from inflationary pressures or loss of value or currency issues and all that. Mm-hmm. So what most CFA members will then do is to come up with strategies which will salvage that value. So normally people, when they're looking at a glass, some they debate that it's half full, some they debate it's half empty. It's about where you're coming from. But the fact that there are still some pension funds to be managed is thanks to some investment decisions that were made that could withstand three bouts of inflation. Yes. So for you to go through that and still have an industry to talk about is no fit achievement. But what we're doing now is, if you looked at the theme for today, people are now saying in our industry, how can we expand the opportunity set, the investment universe, so that we can sort of inflation-proof our investments, or we can mitigate some of these inflationary pressures that are building up. So that is why people are now talking more about alternative investments. And alternative investments is everything that's not traditional investments. We're looking at investing in real estate. We have private equity firms here in Zimbabwe that are even investing in plantations, in new orchards, pecan nuts, exotic investment avenues that were never explored before. All this in a way to say, you may see the currency losing value, but the pecan nut tree is still growing pecan nuts that can be sold to the globe, to the global market at a global price and still retain value. Long-term play, but results will show as we go. Just like in any pension funds investment strategy, almost always about the long term.
I'll allow you, Rufaro, to come in. Obviously, you are here, you were playing a part. So first, I want to just get your views about these conferences. I'm sure every year there are conferences that are happening. Do you think they serve their purposes? And then maybe another issue that I might want you to respond to is the role of the investment bank. Are you one of us, as it were? And do you think that we are playing that role in a more meaningful and helpful manner that's benefiting our society? Or maybe the flag that we take for losing people's money is par for the course. We played a part.
Yeah, look, so I admire IPAS and its members. I hold CPA holders, charter holders in high esteem. Intellectually, you guys actually understand the principles of capital markets, of economics, and you are more likely to be sold to what I evangelize all the time, which is free market capitalism. I think that's how we can transform Zimbabwe from a poor country to a rich country, which is adopting those values. And I think you guys understand these things very well. And from my experience interacting with you this afternoon, you have great minds. You can't be dumb and be a charter at the same time. Mm-hmm. So I think it's fantastic that we have this intellectual capital in our country, and you're able to organize yourselves and have a conference and discuss the issues of the day. So I think it's fantastic. I think it bodes well for us, and I think that so I'm delighted to be here on that basis.
Sure.
And I think that the spirit that you showed here of discussing these national issues should be embraced by the rest of the business community. We really need to coalesce and engage government and the politicians and make the case to them that they would actually be better off if the economy was doing better, if Zimbabwe was thriving, and we should actually push this issue. So I'm delighted to be here. I'm delighted to meet all the talent that is in this organization, and I fully support your aspirations, and I hope that you succeed.
And Bevan, so as we came to the end of the conference, from where you're sitting, do you feel that we have achieved what you or what the association set to do for this year? And do you have some solution to how the IPAS and its members could possibly contribute to the rising that we are talking about? Because certainly we are seeing the chaos.
Yes.
But we didn't come here for the chaos. It's about coming up with solutions to try and achieve some positive outcome even in that chaos. Do you think this gathering has managed to achieve that, and what are the key takeaways?
Yeah, indeed. I think it was a very fruitful gathering in terms of the quality of the discussions, the ability to to embrace different opinions. So some are in very very far apart, but still people realizing that the problem is the same, and everyone is trying to find the path to a solution. I think the key takeaways from my conversation around from this conversation around the chaos was probably that we are dealing with symptoms of a structural imbalance or a structural instability that we are going through, or a shake-up structurally, where the economy structure is changing, and in the process macroeconomic aggregates are disturbed, and the operating environment is unplayable. And personally, I came to the conclusion that when you look at current loss of value, from a pension fund perspective, I think what you lose the most is the investment horizon, because these are natural issues. So, for example, if you have got a savings climate or horizon of 35 years on average for a working employee, if hyperinflation happens at year 34, you cannot create another 35 years for that individual to recover.
They're done.
Yes. But then when you look then at the policies or the strategies that are coming up, I'm confident, Ranga, that somebody who is getting into a pension fund portfolio now, and their fund is invested in a pecan nut plantation, that person, their pension 35 years later will be creating a stable and predictable annuity, which comes from the selling of the fruit and value-added product that comes from the underlying investment. Same happens to new stock of property investments that are happening, macadamias, biological assets that people are investing in. Where I think we're struggling is dealing with natural consequences of loss of investment horizon, because it's a natural phenomenon. When you are 60 and then hyperinflation happens and you lose the whole bunch you have worked towards retirement, you don't have now another 30 years to rebuild that portfolio. And this is where we are having a problem, because an investment maturity is a function of principal plus return. I can give you return, but if the principal is lost due to external factors, then we have a common problem. Yes. When we built these investment strategies, say 2 decades ago, and beyond that, no one was building an investment portfolio in the context of hyperinflation pre-2008. So it means all those strategies that had been consummated 35 years earlier were disseminated just when they were about to mature. So that's really an unfortunate and unintended consequence of these things happening. But what I feel confident about is the future of people who are joining a pension fund portfolio now, because the crop of investment professionals that are looking into their assets and coming up with strategies, I think these are winners, definitely.
Very interesting. So Bevan has been talking more on alternative investments. So you are a listed market guy, as it were. Obviously, you also play in other areas like private equity and all. So when you hear people talk more and more about alternative investments, what actually comes to your mind? Are we seeing a dying listed space? Is it something that concerns you, or you also see it as an opportunity that could possibly unlock more listening into the future? And what's your assessment of this drive towards alternative as an asset class, and maybe vis-a-vis where you're sitting mostly with your exposure in the listed space?
Yeah, so I think that, and I suspect Bevan will agree with me, that the impetus, the pressure to get into alternative investments is because the Zim dollar denominated investments had challenges. So the capital markets community figured, let's get into property, let's get into private equity. Let's get into businesses that are not listed, that can store value better than the listed. I think that there's opportunity. I think that the challenge is to ring fence your Zim dollar investments from hyperinflation, from devaluation, right? So, in as much as the ZSE is not as attractive as it used to be, if you can get stock in some of these companies and businesses that are doing incredibly well, it's still a valid opportunity, right? Delta is doing incredibly well. They're struggling to meet demand. It's a fantastic business. The question is, can you get as much exposure as you want when you want at the price that makes sense for you? Private equity, it's challenging because it's a lot more opaque than the public markets, and a lot of our licensed capital markets players have lost money in that space. So it's
a trade-off.
Yeah, it's not a given that you're going to do well in that space.
No.
And I think property development as well has that history where sometimes you buy a piece of land, you build, you do incredibly well, and sometimes
Things don't.
it doesn't work out so well.
The way you expect.
Turns out people aren't willing to pay that price or that rental, so it's hard. So public markets are much easier and simpler than alternative investment markets.
Perhaps I could chip in, Rufaro, and also add to what you're saying to say, I think private markets are complementing public markets in the sense that we went for an extended period of time where in the real sector there was minimal investment, and private markets are now rebuilding the real sector. So as these assets mature, they will mature into public assets. That's one. Secondly, you also have to consider that when a tree plantation starts doing well and employs thousands of employees, there is more demand for beverages for Delta, and their volume starts to expand, and margins as well. Same happens to retailers. So effectively, where public markets are complemented by alternative investments is the sense that they help to build a business case around even the listed companies. So it's really not about competing for capital, in my view, but it's about complementing each other and to rebuild a new cycle again of investment. If you ask me what the stock market in Zimbabwe will look like 10 years from now, I will tell you that there will be a lot more new listings, that will be new businesses that are probably not existing now or that are being built now through private markets. So I think the two should be complementing each other, and when people go into private markets, they shouldn't go there with an emotional state of mind that I've lost money in equities, so I want to then go into real estate. Some even say you never go wrong with property, and then start making inflated assessment of risk, in my view, which then actually make things worse. So I agree with him that public markets are easier, they've got lower risk, they are more liquid, they are more transparent for the market. You can move in and out. The trouble now is just to say we need to build new stock of public market instruments, and we need to complement the two markets and get somewhere together.
Wow, thanks so much, Bevin. Oh, I said beverage. You're talking about Delta, then I thought of beverages. So
I think I'll take that nickname.
No, thanks so much, Chief.
Cheers,
good to see you, and all the best to you and IPAS into the future.
I've got more beverages to enjoy. You guys continue with your bottle. Cheers.
It's an interesting conversation. So you have it, our viewers. We're joined by Bevin here, and I'll also get another guest coming to join us, and is the past president of IPAS. Welcome, Maringire. So
We'll have a tip with him.
Yeah, we'll invite welcome to the set as we just talk to Rufaro, so you can come through.
No, welcome. Thank you so much for coming and joining us. Appreciate your time. I've known you for a long time.
Very much.
We're all investment bankers here, and one of the themes that came out from our conference is that, at the risk of sounding arrogant, we have a lot of smart, well-educated people in our country. Like in that room, we had what? Maybe 50, 70 CFAs?
CFA,
and
charter holders
candidates,
and candidates,
Right? So we understand modern economics. We understand how a country and a currency should operate. So I want to get your sense. If it was up to you, somebody said to you, listen, welcome, this is the mandate. You're going to run exchange control and currency in Zimbabwe. What's your view? How, like, from a framework perspective, like, at a very high level, right? Without saying
what happens in the bank.
You know, we should change this particular policy or that particular, like, just at a very high level, what are the characteristics of great exchange control and great currency management?
I don't just come and shot you with a question, but we just wanted to see to know what you have been drinking.
Okay, in my culture, if you are invited, the host will offer you a drink. So I just saw this and.
Do you want to participate? Should we get you a glass?
Yes. That's our culture. You are just offered whatever they are having. If you are having
100%,
water, I'll have it. I don't even care what that's what it is. What you are having.
Okay, that's
do you want to have it with ice and water, or do you want to have it neat?
Maybe with ice.
Yeah. So, Barman,
can we get some ice for him? Okay. You can pass through. Right. There you go.
The fact that you are having it means it's not poisonous. So, cheers.
Cheers, my brother. You are much better than my producer here, who's sipping on, what is that?
Orange. It's orange juice. It's not even orange
very
juice.
boring.
It's Minute Maid
This is
juice drink.
This is nectar of the gods from some place in France. They distilled wine and they aged it.
Okay, Rufaro, I know you can go on and on. So let's hold on that question that you had asked about the current one. I think anyway, Rufaro just jumped the gun. I am the host of the anchor.
Thank you. I hope you won't ask that question again, because that's very difficult for me.
To some of the issues that we discussed in today's conference and issue you presented on. So you presented on maybe the transition that a CFA charter holder has to make from just getting the charter or qualifying to the uninitiated to being an investment banker, which is in fact, I found it very profound that you mentioned those things, that there's actually a difference between being a charter holder, CFA charter holder, and being an investment banker. And maybe I'll give you the floor to just quickly highlight those issues, and then possibly along the way tell us that what would that mean if Zim has got that crop of investment bankers that we have in mind. Is that why we haven't seen much in terms of transaction happening, or maybe would that unlock more activity in the space if we get to that level that we had in mind.
Okay, thanks for that. So I guess the whole essence of my discussion is that yes, the CFA program in the charter, it equips you with the technical skills. The body of knowledge is quite great. You learn the analysis of financial statements, you can value companies, you can manage a portfolio maybe, but for you to be a successful investment banker, it takes more than just that body of knowledge. Even just the analytical skills that you learn. Even, by the way, CFA is good in that one of the things they emphasize is ethics. But if you then don't apply those in the real world, then it's essentially knowledge that is nothing. So there is a huge gap between that knowledge and the success in the real world, and most of the differences mainly come from either someone has just acquired the body of knowledge, and either they don't have the necessary experience, they didn't have time to maybe learn, because some of the experience you actually learn from practitioners in the industry, most of whom are not even charter holders, but you have to learn from them. But more importantly, you have to learn to put theory into practice. I was mentioning that you often hear people saying, no, this doesn't apply to Zimbabwe, but it's I think it's probably a lazy way of looking at things, because everything that is there globally, because the CFA, it's a global, they even learn how to invest in a hyperinflation environment, for instance, because they look at what's happening in the globe. But now it's up to you as a man to decipher, to say, from what I've learned, this is the global best practice. How do I apply it to the local environment to succeed? And I guess that's the biggest gap that you're seeing.
It's interesting that you mentioned the whole issue about ethics, because over the years, one of the key sort of accusations against market players has been unethical conduct. So we have got a history of failures of businesses, especially in the financial sector, and part of that was being blamed on unethical conduct. And so maybe you might need to speak more on what that ethics that you're talking about brings to the table, and maybe to the viewer there, should they feel comfortable that now the crop of investment bankers in Zimbabwe, because of the infusion of CFA and its membership, is expected to be more ethical? What if a CFA member is unethical? What happens? Why should people be more comfortable that maybe things are going to be different now?
Okay, so I wouldn't be qualified to judge, especially on the bank failures of the past years. There have been the accusations, but I'm not sure whether it was because of unethical conduct or not. I'm not qualified. But I think if you look at the grounding of a CFA charter holder, even right from the day one when you are studying, the first thing that you have to learn is ethics, and right up to qualification, and even on an ongoing basis. So it's something that become ingrained in you. Yes, there could be many scenarios, and I'm not saying that every CFA charter holder is squeaky clean, but there's always a sense to say, is this right or what is wrong? And I guess that's the foundation of success, especially in investment banking. And it also helps you to look at the benefits in the long term, because normally where you take shortcuts or ethical violations, you want quick buck at the expense of maybe sustainable long-term earning. But where you have ethical and professional conduct, you start looking in the long term.
Interesting. So Farah, I want you to speak about maybe the yesteryears. We have had very successful deal makers, deal structures, investment bankers over the years that have done big things, and yet they didn't have these lofty qualifications that Welcome and his colleagues, yours truly included, have. But they were doing big things, they were doing deals, they were doing a lot of structures. So when you look at these two generations, What is it that you are seeing that's different? Why these guys were able to do certain things, even relatively with their modest, if you want to put it, education in financial issues, which this generation with their loved qualifications have really not managed to do?
So I have it's an interesting question, and I have an interesting perspective because I've been looking at this world for a long time. So if you look at Zimbabwe and you look at the bankers in the 90s who made big names for themselves, Trust Bank, Kingdom, Interfin, et al., right? And their founders were eclectic. They didn't all have the same qualification.
Okay.
They didn't all have the same background educationally, institutionally. They were very different individuals. So I think that, so to some extent, your question is a bit of a misnomer in that it's not like there's a certain qualification or university course that dominates a field. I think that so for sure in South Africa and Zimbabwe, in other parts of sub-Saharan Africa, for example, if you look at the biggest companies and you look at the qualification that dominates CEOs, financial directors, for the longest time it was chartered accountants. But today it's different. Today we value people with engineering degrees, with other technical qualifications, who've done an MBA or who have a different postgraduate qualification. So the world is changing, and yes, I'm not taking anything away from the CFA charter holder. It's a very prominent, well-respected qualification within investment banking. But the world is dynamic, and it's not a given if you have that you can have it all your way. And I think that so that's the way the world works.
Yeah, actually I agree with him. I think one thing you have to note is just earning the CFA charter is not a magic wand to say suddenly you're successful, or neither does it mean that every successful banker or anyone success, because normally there's a distinction between qualifications and doing something successful. There's many more attributes that are then required for you to be successful. So your educational background is just the foundation, but it doesn't mean that someone who doesn't have this CFA charter can be successful as an investment banker. And that's what we have been seeing. And maybe it is because there's still other attributes that have to come through, even things like your emotional intelligence, mental health, the issues that we're discussing about this afternoon. They are very key in terms of success, especially in this dynamic world. Rufaro has just spoken about even just being abreast of the latest trend. If you think that now I got this qualification and rest on your laurels, you'll be overtaken. Right now, everyone is talking artificial intelligence, machine learning, data science. Those become very topical now, and you have to keep abreast of all those issues.
Okay. So when you look at the crop of candidates and members that we have, and that transition that you spoke about, do you think that we've got the right environment for them to transition? Because exposure, mentorship, and getting some of those softer issues, you need to have some sort of a framework or a system that is in place that can nurture such talents do you think that we have got it internally, and vis-a-vis maybe they are better, they can get better exposure and opportunities if they take their talents elsewhere?
I don't necessarily think that taking elsewhere is the solution, because otherwise you just think if I'm somewhere, it just automatically happens. I think it's two ways. First, the initiative by the either candidate or a charter holder yourself to say, I need to learn, and that understanding that I just got this foundation, but I need to learn more to do more than that. But also, I think maybe it's a challenge to IPAS. There isn't really a structured training process for especially investment professionals. It just depends on the institution out there. But if you look at other professions, for instance, they have a program that one has to go through, and you actually almost do like a tick box to say, I'll give you an example. The chartered accountants, there are certain areas that for you to be a chartered accountant, it's actually ticked off. Did you do your auditing? Have you prepared a full set of financial accounts and all? So it's something that is probably lacking that practical aspect in a more structured way. But I guess over time, and like I said, it's probably a challenge for IPAS to start looking at that and have something, even in collaboration, obviously, with most of the key players like your asset managers, to say, how do we improve the skills within our industry?
Welcome. Thank you so much. We truly appreciate.
So, do you have an opinion on this cognac? I think it's really good.
It is. I might come back for more.
I don't know.
You're welcome, and you should.
I don't know whether it's still his opinion, because he'd already. It's called a lead. It's called a leading question.
Yeah, he normally influences.
Right, so
I will invite Dr. Alfred Mutimkulu to just come and sit here, and so that we can keep our conversation going. Welcome to the show, Doc.
Thank you.
It's good to have another sit down after a fantastic afternoon at the conference, and the discussion that we had. Maybe as we are waiting for Rufaro, what do you make of today's events, and especially the session that we had?
Look, it was a great event. Diverse opinions. It's always nice to have a pool of talent gathered together for some of us that are passionate about human capital development, and just to brainstorm over a few things and see if your opinions or perspectives measure up. And yeah, it was a great event.
And maybe you are best qualified to answer this question. So when you look at the era today, and maybe the era when you just started, what has changed? What do you like about now, about today? What do you like about then, maybe 20-25 years ago, like from an investment banking or investment industry perspective, and seeing the interaction that we had and the younger new faces that were in that room?
Yeah, thanks. Some of us are beneficiaries of great mentorship from that era.
Okay.
That turn of the century era of investment bankers, where I heard from the last speaker, some of them may not have had the kind of professional or academic qualifications that they had, but this human touch of nurturing and mentoring talent. That was great. What we see now, that is abundant. Yeah, I remember back then, I think there was 1 or 2 CFA, ABC, and then a few people were starting to it. And now we're looking at a conference room full of charter holders, which is great. Which tells us that there's a lot of human capital development that has happened in the past 20 years in the market. And you can see it in the array of products that are coming on stream, your ETFs, even the idea itself of a Victoria Falls Stock Exchange, a USD denominated exchange. And that's a result of that human capital. And what's exciting about all this development, and we are also seeing what IPAS is doing in universities, running research competitions for varsity students. We've just had one who is joining us from that crop.
Yeah, it's fantastic.
Very smart kids, very alert. They come prepared because they've worked
gone
with
through a
IPAS,
mentorship program. Okay, it's that note makes me feel very humbled, because I work with those.
Yeah, but I want to push back. I think you guys.
So wait,
you guys are deviating from.
Wait, Rufaro. So I know we brought Dr. Alfred Mtumkulu here for us to just have just a short discussion on the currencies, just to continue from where we left in the discussion. And I think, okay, I'll allow you to vent, to pour out your everything.
Looks like he's got issues. I don't know. What's your problem?
Look, I'm actually a fan of the doc. I think he's.
Go on.
I'm expecting a bad day. Okay, continue.
Spill it out.
When I came into the capital markets, I got Mkomong, by the way. So I've got lots of respect for him. We differ intellectually about a bunch of things, but
which is good. Intellectuals, they don't have to agree, right? That's where new ideas come from.
Yeah. So, but when he says, look, the Victoria Falls Stock Exchange was born of this concept of creating an opportunity to transact in a different currency. That's not actually what happened. What happened was there was a problem with Old Mutual and PPC, and that's how the VFX was born. Having said that, today I think the VFX is doing well. I think we've seen many days where there's more trading on the VFX
than on the ZSE, yes.
So it's living up to that initial aspiration, but that's not what. So, and one of my gripes as an analyst when I think about Zimbabwe economics is that we don't call a spade about these things, right? So I want to just. That's why I wanted to push back a little bit.
So you can respond to this.
The Victoria Falls Stock Exchange, it was not born of this idea of let's have a hard currency exchange, right? There was this problem with Old Mutual and PPC, and we can have a different view on the nature of that problem, but it wasn't. The idea was not. Let's have a hard currency exchange. It's working. Today it's a good thing, but that was not the initial idea.
Well, we could debate about that as to the real idea. That could be it very well. But where we are now, as you rightly say, is we've got a USD denominated exchange.
100%.
It's doing quite well.
It is.
Prospect for growth are high. likely to be a Pan-African USD stock exchange, the only one of its kind, and it's got human capital skilled enough to manage. That's where we are now. As to how, well,
Yeah,
it could
we'll
just
differ.
be a
But the
debate.
currency, so the debate we should actually have is the currency. Does in your opinion, does the Zimbabwean dollar have a future? Should it have a future? And if you believe the answer is yes, why?
Which I'm sure you know, I believe the answer is yes. So that's kind of a rhetorical question. Look, the issue is that of confidence and trust in the local currency, amongst other things. Confidence and trust, not just in the local currency, but confidence and trust in the banking system. Confidence and trust in many other institutions, perhaps. Your question is, should we have the Zim dollar? Is it ill-fated? What we have now, I believe, is workable enough. If you've got a multi-currency system, of which the local currency, whatever its name is one of them,
It's part of the
and you are
market.
conscious that you are suffering from a confidence deficit, a trust deficit. So what you gotta do is to let this thing that is supposedly most trustworthy run as you build confidence.
The US dollar.
Yeah, with the US dollar.
Multiple currencies.
The multiple currencies, the
anchored by
rand, the US
USD.
dollar, of which the USD is one of them, right? So let the multi-currency run. I don't know for how long. I hear 2025. I will say I don't know how long. Let it run. But as it is running, one hopes that the issue of trust is being addressed and the confidence in this local currency built. It's definitely not an overnight gig.
Do you have any problems with having the Zim dollar or some local currency, or maybe your issue is on the exchange rate and how it's managed?
So my issues, so you know what, I actually do not have a problem with the Zim dollar.
Yeah, I don't think anybody has a problem with the Zim dollar.
If we, as Zimbabweans, as the Reserve Bank of Zimbabwe, as the government of Zimbabwe, if we manage a Zimbabwean dollar that Zimbabweans can stand behind and be proud of, I would support that. I think that would be great for our country. My concern is that we have not done that, right? And we have made this case that a strong local currency is good for Zimbabweans, but we have not done what we needed to do to make that a reality. So we've ended up with hyperinflation. We've ended up with a local currency that has failed. Okay, so my problem with the Zimbabwean dollar isn't that I don't like the idea. I love the idea of a strong local currency. We have not done it. That's my problem. So I'm saying, look, guys, we failed with our local currency. But if we are serious and we want to compete, let's not suppress the US dollar, the rand, whatever currency Zimbabweans want to use. Let's make that our benchmark to say, if we want the Zim dollar to be taken seriously, let's compete, okay?
But
With
that's
the US dollar, with the rand.
Yes, you want to
yeah,
respond?
but that's exactly what happens in a multi-currency regime. That you've got these other currencies working alongside the local currency.
Yes.
So I think where you are refusing to get to is accepting that it doesn't work up like that tomorrow.
No, it doesn't. But
Yes.
let's compete. Let's compete.
so-
Let's take the time. Let's compete.
So, and this is where we fall back and have reference points in history that, okay, it surely doesn't happen overnight. If you look at your greenback, your US dollar, and you chronicle its evolution,
I agree.
and you look at how it started, or its descendants, so to speak, how they started. I always like to say the first child that they bet their currency, within 5 years, the thing had lost 98% of its value. 1775 it was launched. 1780 it was worth 2% of its original value. Okay, and so on and so on. And what you are looking at now as the world reserve currency, 100, 200 years later, has had a long journey.
No. But I'll stop you. I'll push back. Oh, I use the US dollar. No.
I just picked one currency, but if you look, even if you go to Europe, if you look at the other currencies post, you look at the Second World War, look at after the war, the ravages that were there, and how your world banks came up as kind of rescuing those currencies, anchoring them on something in gold. So my point here is, if you accept, and I think there is consensus that there is a trust deficit, there is a confidence deficit in local currency. So how else can you build that confidence? Let the other currencies that people have confidence in be in use.
So, Doc, I'll ask you a question. Say, in a situation where it's really difficult to manage the Zim dollar alongside other currencies, like what we've seen, they had to, they've actually used more like a sledgehammer to try and give the Zim dollar some acceptability, but still it's a problem. Does it not make sense maybe in the short term to suspend it and go with a full multi currency? And if not, what would be your worries of a full-blown multi-currency system?
Multi-currency, including the local currency.
Right? Not multi-currency, actually, full dollarization.
No. That's disastrous. There are many reasons why local currency is important.
I want to hear them.
One of them being the when you take away the local currency, you are crippling a critical national institution,
which is
the central bank. Okay, all right. You rather.
Why is the central bank critical? Why can't we do away with it and have in other markets they separate the role of the central bank from the financial markets regulator, right? So in South Africa, for example, they have the South African Reserve Bank, and then they have the, what do they call it, Stranga?
Is this financial
FASS?
Yes. Yeah, but you gotta look at it. It's all clouded with the noise of the day. Okay, but look at it as an institution that is supposed to be at the forefront of economic research in any economy. Okay, so if you are dollarizing, what you are doing is you are subcontracting so many other things that should be done domestically. Okay, and one attribute of money is it must be elastic. Okay, which is why the gold standard flopped in the first place. You must be able, printing money is not bad at all the times, right? Sometimes you gotta print money.
I'm an Austrian, so I think it's bad. But
you could
are you not
money.
an Austrian?
No, I'm an African.
He doesn't describe all those lofty.
But my point, even if you look at Woodrow Wilson when they were setting up the Fed, one reason why they were setting up the Fed in 1913 was having money finite or fixed to gold it cripples the economy. And it's the same thing that will happen when you have a hard currency like the US dollar, which you have no control at all. So even when you want, forget the noise around, when you want to excite demand in the market, how do you excite demand? Okay, how do you put money into people's hand if you don't control the currency? So you're crippled as a country when you don't have a national currency. Not to mention that you are using such a strong currency that damages industry, as you can already hear from the noise from industrialists.
Doc, thank you so much. It's been a very long day, and I know next door there is a cocktail, so I don't want to hold you for too long. Okay. But otherwise,
he's only drinking orange juice.
Yeah, no, but you still have to interact.
Thank you very much.
We can always finish this discussion. So to our viewers, thank you so much, and we'll have our last. Our last guest today. We're going to have Kura on the show, so he can be ushered in as we wind down. It's been such a long day, and I'm sure you can see everyone is getting tired, and someone like Rufaro here looks like he said too many to drink, so we just need to retire them, and so that we can focus on the other things that we have to do with this evening. So, Kura, welcome to the show.
Kura, my guy.
What it is, fella.
So happy to see you. Thank you. You're a man to my spirit.
Amen. Amen. Let's vibe together.
Do you want a glass of this, or do you want to have something else?
My fellow Samaita tells me the brandy is awesome.
It's amazing. Do you want to tell me your glass?
Nematombo ndokumbira.
Good, welcome to the show.
Thank you very much, Ranga.
It's been a long day, man, with the conference with IPA's crowd, and I really liked your presentation on real estate, and there are a few things that obviously caught my attention, which we want to talk about, and obviously all these things that you are seeing in the property space and the changes that are happening, that most of us obviously who are just used to the listed space, and so private equity, alternative investment kind of things are probably new to. And yes, you spoke about the activity that is happening in the real estate, and you say it's necessary. It's trying to address the reduction space issues and things like that. Okay, I want you to unpack it to our audience yourself, and the thinking and what you are seeing in the real estate sector.
Sure. So real estate is always the demand for real estate is a derived good.
Yes.
When people have got money in their pocket, that money needs a till for it to find a place to continue circulation.
Yes.
So people want to sell things, be it my Fafi's tuck shop to listed Pick and Pay doing something. Mm-hmm. So as Zimbabweans, we're aspirational. Mm-hmm. When we've got the money, we've got the dollar, and it's in a flow, it has to be in a space that is worthy of me. So I travel in the region a lot, and I can tell you that the Aspendale Pick and Pay is far better than the Four Ways Pick and Pay, because we've now got an appetite, we've now got some dollars to spend, and we want to buy in a place that's reasonable and decent. And the developers and particular brands have taken a leadership role in saying, let's give them the best, let's give them the new generation stores, and it's quite exciting to see. So when money needs to be spent and it's real dollars, then that means I can put in a tenant who can pay me real dollars in rent because he's collecting real dollars. Okay. And we've historically had Zim dollar assets. So my folks bought a house on a mortgage in Zim dollars. When it comes to next generation, we can actually realize or leverage in real dollars against that, and that's exciting opportunity. You've got a capital base that has already been paid for. Now you can top it up and recreate, repurpose, redevelop, and we go forward.
And you actually said real estate is not a bubble, but I think some people would not agree with you this, because what they're seeing right now is investment, whether in clusters or in new shopping malls that are coming up. They could argue that there's no pattern to this thing. It's maybe some people or entities with access to money somehow. You are not seeing your big, your traditional institutional investor taking a part, and the build up that is there. You're talking of derived demand. Is there really demand for some of the properties that are coming up, whether in the cluster space or the big shopping malls? Won't we find ourselves in a situation where we've got a huge glut of space, and there are no takers for the right of the kind of value that the owners will be looking for?
So real estate is dynamic, and it's driven by demographics and income. So the populations are getting more and more dense. I quoted stats from my young brothers at Injector Analytics, and I haven't even had the drink yet. Analytics, okay. And they surveyed Newlands as an area. 427 stands currently, from 2,000 square meters to 20,000 square meters, let's call it. There are 39 cluster developments that are going on within that defined area, and on those 39 developments, something like 400 and something units are coming out of that.
Okay.
The impact on that area is you've now got a much denser population, and the product is now a $250,000 product that's going to come with vehicles, that's going to come with households, and those households want to nip to the shops. It wasn't a mistake that the Pick and Pay just down the road, which was perhaps servicing the prison community that side, it's been totally refurbished, and it now faces the Newland side, and it's two top standards, because they realize that they spend, when you run out of on the weekend, we're having drinks, we need some ice, you want to pop in and get some ice, or some bribe bricks, you're going to go to that Newlands, because that the market has moved towards you. If you look at the demographics, I stay down the end of Enterprise Road. For me now, the easiest thing in the world is literally to drive 4 kilometers from my house to Highland Park, where I can have coffee downstairs, or I can go upstairs and have a drink at Upstate, because it's now convenient. I don't have to go further than that. So my pent up spend has now become easier for me to access by real estate that's been put in front of me. Did I think to put one there? Did I know I had the demand? If you look at the development just up the road on Ridgeway and Enterprise, that Nando's trades out its socks, right? On a Sunday night, if I think about it, do I really need to cook? Do I really need to get auntie to make me something? Or just pop up to Nando's and Bob's your uncle? So you put it in front of people and they come. You look at Simbisa's expansion. They've seen yes, they've coupled it with a financial services business. Inbox is having EcoCash's lunch, but people are buying chicken. Go there any time of the day, and you'll see people who've got money and they're spending it, and they're spending dollars. There's not this Zim dollar arbitrage story. Guys are going, and that's the lifestyle that we've got to. So it's meeting the demand, and that demand is ever increasing, right? Because once you've earned it and worked for it, money has no utility in your and my wallet. It's in the movement, it's in the velocity. That's why I say money is moving, because it's having a natural flow, and wherever there's a flow, somebody wants to just put in a cup and just take a sip, and that's how we create value.
How about the issue of services, of infrastructure? So you're talking adding an additional 400 units in a neighborhood, maybe that had another 400.
Sure.
But the roads, the road network, maybe the service, the whole infrastructure that is needed to support a certain number of residents, is it there? Because we are seeing built up, it's mostly residential or malls, but we are not seeing much in terms of the road network being expanded in anticipation of the volume of traffic and individuals that are going to be living in those areas.
No, you're entirely correct that the infrastructure spend hasn't kept up. Salisbury was developed for 200,000 white people on 2,000 square meter stands, even more than that, 4,000 square meter stands. So there is some catch up to be played, and there is a short term gain in stretching existing infrastructure. So to have Village Walk in Borrowdale, you see that as a complete product. You don't see the 1 kilometer sewer pipe that goes all the way down Edinburgh to connect to the main sewer in the Borrowdale Flay there. What investment does, the more you can put on it, the more affordable it becomes per unit. So all of those clusters that you see along Edinburgh are benefiting from a trunk sewer that has been put in by one player, and then I'm sure there was some sort of smart recoupment mechanism that as more people tapped in, they got onto that. But if you go to national housing policy, I think clause 43 and 44 state in very simple black and white English, bulk infrastructure is the provision of the state authorities, and then you and I should, big English word, should be able to, at our site boundary, pull services, power, electricity, sewerage, and get about our lives. This contributes to why real estate is so expensive in Zimbabwe, because the developer then has to do more. He's not just looking at on-site infrastructure, he is compensating. If he wants a transformer, you go to Zesa, transformer, he says, Isa, once you put it in, you hand it over to them. So you've had a dead cost to you, but you've got the utility, and you're going to make it up in the margin that you sell those units at. So the contributory cost to why our real estate is expensive is because the costs are expensive.
I know, you're not a big fan of real estate.
No, I'm not.
With what Kura here has shared with us, what would be your response?
Not a fan as an investor, or are you a bird that lives in a tree? You don't want to live in a house in a nice place, and safety and security of tenure and all that stuff.
Everybody wants to live in a nice place. Everybody, right? If you give anybody half a chance to live somewhere nice, what are they gonna do?
I hope they do.
My opinion about property and why it doesn't excite me is not a function of a weird idea that people don't want to live anywhere nice. Look, everybody wants to live somewhere nice, but my view is different, and so I think that for the first place, we have a challenge in the suburbs of Harare, like Mount Pleasant, like Fenona, where all these cluster homes are being built, right? Where the traffic was designed for, like if somebody owned a home on an acre and they had 2 vehicles, and now there's 20
units there, and everyone has got their vehicle of their own.
2 vehicles, not one.
Sure, that's the price we pay. So I can understand that it's going to become inconvenient, but then now we get the volumes, and with the volumes we hopefully have the attendant revenue, and with the attendant revenue we can expand that. So if you look at in front of Highland Park, they put in the traffic lights, they widen the road, they created turning lanes, and that's out of self-interest. A shopping center thrives on ease of access, so in their own interest they did that.
Fantastic.
Now let us do that
On Edinburgh, let's imagine that in Edinburgh. How many units are there on Edinburgh that have like 10 units where it used to be one per owner?
Sure.
Right? Now there's 20 vehicles at that home that have kids that need to go to school, and there's all this traffic. Can it work?
So
on the existing infrastructure?
On the existing, it's going to be a stretch, but this is where the S-curve of the next growth needs to come to say, hey guys, look at how many cars are passing this particular point, and we need to make a plan. So look at the roads and how they're planned. You will see that there is they're great servitudes. Open space. Look down Enterprise Road, and you'll probably have a service lane on either side, where they appreciated and anticipated that when we were planning the city back in the 50 Chakutis, they said, look, 50-year view is going to go like this. It is now incumbent upon us to actually actualize that and start putting in better road infrastructure. But the capital funding of that has been a challenge, and the vision, it's been a challenge dealing with a city council that has a planned master plan from 1994, and it's got amendments but hasn't been ratified into the 2020s that we are right now. Real estate attracts significant chunks of capital, and those significant chunks of capital need to make a long-term plan. It's not a 5-year play, it's not a 10-year play, it's a 20-year play that we need to do. And to support that, you need massive pipes in the ground, and you're not going to see the return on that right now. If you're well traveled, if you look at Melrose Arch in Johannesburg, the Mines Industry Pension Fund, one of the particular funds, went bust, putting in that super basement so that you can have all the fancy buildings up top, but somebody has to have the guts to invest in the infrastructure to create the uplifting value add on the top structure. And we're not yet there. We don't have a match between.
Yeah, Mel's Arch is phenomenal.
So, gentlemen, on that note, let's end the show. Kura, this was just a starter on this whole real estate debate. We would love to have you in our studio, and then we can discuss this issue. At least we're still feeling quite fresh. We are all tired, exhausted after a long day.
Are we?
Certainly I am, and next door I can hear some music. That's
you want to dance?
Yeah,
you want to leave us?
And to our viewers,
no, but I'm very happy to have Kura here.
Yes, we will certainly have him again in the studio next time. Our viewers, thank you so much for watching today's show. We were discussing so many things that we came up at the IPAS conference and here in Montclair Nyanga. We hope you had a fantastic Friday, and wherever you are, just grab a drink and
not that kind of drink, because that's
cheers.
boring.
Just grab a drink and cheers to a lovely night. Have a fantastic weekend. See you next time.
Be good. If you can't be good, be good and
Cheers, fella.